What happens when one of the most popular apps in America with 183 million monthly users is forced into a fire sale divestment? Could a single deal reshape the future of social media, shift power between US and Chinese tech, and even create new risks for Oracle and Meta? The TikTok US deal is not just a political story. It is a business story with huge implications for the stock market. In this video, we are breaking down who wins, who loses, and what it all means for investors. TikTok has become the defining app of the 2020s, just like Facebook was in the 2000s. Fueled by the pandemic and viral short videos, TikTok exploded from 37 million US monthly active users in early 2020 to 183 million today, more than Facebook or Instagram. But unlike Facebook or Instagram, TikTok is not American-owned. It belongs to ByteDance, a Beijing-based company. This foreign ownership is what worries Washington. Two issues drive that concern. First, massive amounts of US user data could potentially be exposed to a foreign government. And second, the recommendation algorithm itself could influence public opinion. These fears are especially sensitive in an election year. That is why the US passed the Protecting Americans from Foreign Adversary-Controlled Applications Act, requiring TikTok to be divested to non-Chinese owners or face a nationwide ban. App stores like Apple and Google would be forced to delist it and updates would stop. Rather than fight an outright ban, ByteDance is close to finalizing a deal. Under the proposed structure, a US-led consortium including Oracle, Silver Lake, and Andreessen Horowitz would buy 80% of TikTok. US ByteDance would retain 20% but lose operational control. The board would have 7 seats, 6 controlled by US investors and 1 by ByteDance. Oracle would not only hold the largest stake, likely 20 to 40%, but also take over management of both the US algorithm and the data, hosting it on Oracle's cloud. This is a dramatic shift. TikTok US will operate under a US-specific algorithm, separate from ByteDance's global systems. For ByteDance, this divestment is not a defeat. It is an opportunity. TikTok US represents less than 10% of ByteDance's revenue, about $10 to $12 billion annually, and is still losing money due to regulatory costs. ByteDance's main business, Douyin in China, brings in over $100 billion a year. Selling TikTok US for an estimated $50 to $60 billion would allow ByteDance to shed a loss-making asset and double its cash reserves to nearly $100 billion. That capital could be reinvested into AI and global expansion. ByteDance still keeps 20% financial exposure to the US market, but without the political headache. Oracle is the star of this deal. By taking over TikTok US, Oracle jumps into a fast-growing social media and advertising market it has never operated in before. This could put Oracle in the same conversation as Meta, Google, and Amazon. The cloud business also gets a boost because all US TikTok data and algorithms will run on Oracle infrastructure. But investors should not assume this is a slam dunk. Replicating ByteDance's algorithm, one of the most complex in the world, may prove extremely difficult. If user engagement drops, Meta and Alphabet would be quick to scoop up the attention and add dollars. Financially, Oracle may also have to borrow to fund its stake, estimated at $16 to $19 billion, given its current $11 billion cash position. TikTok US is still loss-making, so Oracle could be recording losses on its income statement for some time while integration costs rise. This is a very different business model than Oracle's traditional enterprise software. Meta and Alphabet now face a more stable TikTok competitor in the US market. The threat of an outright ban has been removed, meaning the battle for user attention will continue. If Oracle succeeds at rebuilding the algorithm, TikTok could eat further into Instagram, YouTube, and Facebook ad revenue. For Chinese tech companies, this deal is actually a template. It shows that with the right partnerships and joint ventures, Chinese firms can still access the lucrative US market while easing political risk. This could open the door for similar deals in AI and cloud computing. As investors, there are 3 things to keep on your radar. First, the algorithm transition. If engagement falls, TikTok's ad revenue could decline, affecting Oracle's returns. Second, the financial strain on Oracle. Large upfront costs plus integration risk could pressure its margins. Third, ByteDance's next move. With tens of billions in fresh cash, it may accelerate AI investments or even prepare for a blockbuster IPO. This deal also intersects with macro forces. Oracle will need to hire top AI talent to build a US-specific algorithm at a time when competition for those workers is fierce and visa costs are rising. That could further strain margins. Let's recap. TikTok US, with 183 million users, is being sold to a US-led consortium to avoid a nationwide ban. ByteDance benefits by cashing out of a loss-making asset and doubling its cash to invest in AI. Oracle gets a chance to leap into social media but faces major risks with integration and algorithm replication. Meta and Alphabet must prepare for continued competition. Chinese tech firms see a new template for entering the US market. For investors, this is not just a political story. It is a business realignment with far-reaching consequences for stocks like Oracle, Meta, and even future Chinese IPOs. What do you think? Will Oracle turn TikTok US into a powerhouse? Or will the algorithm challenge give Meta and Google an edge? Is this deal a win for American innovation or a hidden boost for Chinese tech? Share your thoughts in the comments below. If you found this analysis helpful, hit like and subscribe to TradingKey. We bring you clear, actionable insights on the biggest market stories daily.